Welcome to the podcast for people who hear the name TIFF and think of the governor of the Bank of Canada and not the Toronto International Film Festival. I'm Kristen. This is Sean and Vaughn. I'm so happy they liked my joke. We're mortgage people. Hello, friends.
I have to say, we've had a joke on this show before to open it up, and I think this one was leaps and bounds.
It's a good
Way
one.
better.
It just occurred to me that, if you told me in my 20s that I would hear TIFF and first to think of interest rates and not the glittering celeb festival that is September in Toronto,
Which is going on right now. But you're right.
I
When
keep
you said
hearing it.
TIFF,
Oh, a lot of people are. Oh, I'm so lame.
Are you saying that people that are interested in a mortgage podcast are uncultured and not
No,
interested?
they don't bother with celebrity, is what I'm saying. They're
Oh,
cool.
okay.
They're above that.
Yeah.
Okay, so do we want to start with a little deal of the week?
definitely
Yes.
good.
How
Tell
could you
me.
say no? So I just wanted to talk a little bit about something that, so if you are a mortgage agent or you know mortgage agents, you may hear, actually, if you talk to realtors as well, you hear a lot about, oh, I did this for my client and I did this for my client, and still they went with someone else. Losing deals is a big problem, especially in such a weak market. And I had borrowers who were, really interested in saving money and getting the lowest rate. A lot of people are, of course. And so there was negotiations between a few lenders, and I don't know if we want to name names, but they had been approached by their banking institution. And in the end, even though that bank kept offering them lower and lower, more tantalizing rates, eventually they just said, we're not getting any answers. No one is being transparent with what fees we're going to be responsible for, whether or not we're going to get cash back, what is going on with an appraisal or anything else, or when are we getting paperwork that says we're approved. And now, this file is actually at risk of not closing on time because of all of the delays. And so they're just saying goodbye to their bank and they're moving forward with me, which is a delight to me, of course. But now I have the fun stress of having to connect everybody and making sure that they don't renew for sure that they don't renew into a closed mortgage with their current lender. They can still renew into an open, but they'll incur more fees to discharge it after the fact than they would if they just discharged it on maturity. So we're going to try to save them a couple $100. But, in a sense, if they end up paying more, they're paying more because the bank has just been stringing them along and not really, being transparent and being helpful.
Yeah, it sounds like they've just decided, have you heard the term or the saying, one in the hand is better than two in the bush?
Yep.
Right. So the one thing that you can definitely say, I have this, and you've been answering the questions, this is what the deal is. That's better than this imaginary deal that they may or may not have with their bank, because there's nothing behind it. Right. It's all smoke and mirrors until there's something in writing. And I've had it happen a number of times where a new potential client will say to me, hey, I talked to my bank already. They gave me X, some unfathomable rate. This doesn't sound real. And when it doesn't sound real to us, it often is not real. And the one difference was that they were getting a rate that was 25-year amortization and less than 20% down. And everything we were talking about that would help them to qualify for the property they wanted was they needed to put 20% down and they needed 30-year amortization. And that rate is just not available for that person. And so this imaginary rate sounds great it's not the product that I would recommend or that made sense for them.
Or it
And
even
it's
is the solution that is viable.
exactly. So, and that's like you get a lot of great people at the bank and different banking institutions, but it depends who you get because not everybody knows what they're talking about when it comes to mortgages. Maybe they're great at opening a checking account or mutual funds.
Yeah, they wear a lot of hats there, and they don't have to do any sort of licensing in order to sell their mortgage products either, which doesn't necessarily, by default make us better at what we do, but
Doesn't it?
you took the
We
course.
have a license.
We do have a license, and we have a lot of responsibility that comes along with that license. But we also have less stuff on the periphery to worry about. We're not getting people new bank accounts. We're not managing their other sort of mutual funds and investments like that. We are solely focused on helping them get the financing for their property. So,
Mhm.
we can by default we can offer a lot better service.
Yeah. I think that having a license does make you by default better at originating mortgages. I just think like if you had to pick between you going to get a haircut, are you going to go to someone who went to Vidal Sassoon or someone who just cut their doll's hair at home?
Yeah, but
That's maybe an unfair
the very
comparison.
best, the very best mortgage agent at one of the big banks that doesn't have a mortgage license is leaps and bounds better than the bottom
Sure.
mortgage broker that has a license. Like there's no comparison between those two
Sure.
people. Like getting that, like it's experience and exposure to mortgage files that makes you good at it, not a piece of paper and not working at the bank.
Sure. I mean, sure, but still.
But in the past, I've won a lot of business from the bank for the same thing because the service has dropped the ball. One thing I noticed that from some of those people that come to me is like they said, "Well, we've had this approval in our hands, but we have no appraisal yet." And appraisal is very important, especially when you're in a market that's fluctuating. Specifically if the market is in a slight decline, you want to get that appraisal done sort of the day that you have an accepted offer. Because then you're getting the appraisal done at the current market value. If you want to wait 2 months or 3 months, if it's a long closing, and then take an appraisal, you might be short on the appraisal, and you might be in big trouble if that happens. So I've definitely won business in that scenario, and then lately I've lost some business because some of the rates that the banks are putting forward that goes right through to the end, out of this world. And we've seen it in the past as well. We've seen when banks have been hungry for more business, they lower the rates, they take everything, and then a couple of years later, they get slapped with a fine because they were too aggressive. They took too many bad deals. So in our industry, things will turn around. Right now, definitely challenging. With the pool is smaller. Real estate sales are down 40%. Everybody has a book of business that they need to fill. All the banks, so they're competing as hard as they can. But when we have great agents like you, Kristen, that can win business based on service, we love to hear that.
Yeah, I mean, this sort of speaking of people and the competition and the rate frenzy that we were just talking about at banks, you kindly shared the Financial Post article with us. Are you seeing customers and people in the general public, are they frothing, Googling rates? I just want it for context. I put a poll out on LinkedIn to gauge people's interest in LinkedIn, whoever sees my posts on LinkedIn. And there were 2 participants, and one of them was Sean.
What a good guy.
Thank you.
I don't know if
You're
that says
welcome.
about my profile on LinkedIn, or I'm not, a lot of people in conversation are like, are you getting lots of calls about rates? And I'm not getting, I think I've been educating my clients for a while now that those rate announcements do not pertain directly to fixed rates. And I think people that I know are kind of getting that, but what are you seeing out there?
Go ahead, Sean.
Yeah, new people that are coming in. I mean, I don't think it's something that you can necessarily say that because they know me, they know that, the Bank of Canada interest rates are not affecting fixed rates directly. So, everybody I talk to has questions. They don't know about interest rates. I think people are acutely aware of it. But I wouldn't say that's different today than it was 6 months or a year ago, or even 2 years ago, as interest rates were going up. I think it's
Mhm.
just this constant thing that people are interested in. Is there a frenzy of all of a sudden people are Googling mortgage rates more? I don't know that. I don't feel like it's any different than it
Mhm.
was before. People know interest rates are coming down, and so they're interested in that. And there's more mortgage renewals coming up now than before. So I think just naturally people are interested in it.
Sure.
I mean, the article suggested that the interest rates were the most Googled thing. I mean, I find that a little bit hard to believe, but anecdotally through social media, we're all connected to a lot of people in the real estate industry, and I've never seen an interest, or I've never seen a posts about interest rates this much as we've seen.
Mhm.
I mean, there's less deals to do, so there's less deal content to produce on the
They don't
real
know what
estate
else to
side.
post about.
This is what I'm saying, and like
Mhm.
everybody waiting on Bank of Canada, and you see a lot of live streams, like we're doing the live streams on the Bank of Canada rate announcements, and we just never seen that before. They've had very little impact, and a lot of that is due to it not in the past not having any impact on the qualifying rate, right? So like really, the interest rates affect what you pay, but not necessarily what you can borrow, but they have a direct correlation to that qualifying rate, which really is the most important factor in the equation. It's like, how much can you borrow? Can you borrow enough to make this purchase in this market?
Mhm. Yeah, I think that there are, you've been saying for a long time, we've been having this conversation of like, is it affordability or is it feelings? And when I hear from realtors in term when they're really sort of antsy about the rate, it really does have to do with affordability. They're like, can I show my client this property? Where are rates now? So I do think that affordability piece is still very present. It's always going to be present, especially in like the condo market, because people are always going to be buying the most that they can afford, right?
There
Yeah.
are deals to be done right now. Like there are deals to be had. There's people that need to sell their properties, and properties that were maybe worth 100 or 200,000 or would sell in a frothier market are just sitting there, and people need to sell those properties. As
Mm-hmm.
interest rates come down, those prices will go back up because there's more people that are all of a sudden interested in buying them. So today, take that variable rate, purchase the property at a lesser price, and then have the rate go down as over the next year and a half, or even sooner. It's going to happen next month.
Let me ask you, unless Vaughn, you were going to say something.
Yeah, I definitely want to beat this drum a little bit more, a little bit harder, because I don't think everybody has heard it yet. So I'm going to continue to pound away on an analysis of an individual or a household. It doesn't really matter, that makes $100,000 a year. You know, when Bank of Canada qualifying rate was 5.25, they could borrow roughly $500,000, which is enough to borrow. If you've got your 20% down payment, to get you into an entry level condo in the Toronto market, right? So like where interest rates were 6 months ago, people were having to qualify at 7.5%, which means that they could borrow 120,000 less, which is crazy. So you go from 500,000 mortgage amount down to 380. That's not enough to get you anything in the Toronto market. You have to
Mm-hmm.
go north of Barrie, maybe even further north of that, in order to get into the market at all. So now where we are, if the average 5-year fix has come down to like roughly 4.5%, you're qualifying at 6.5%. Now you can borrow only $80,000 less than you could 2 years ago, right? So you're up to 420,000 in mortgage amount. It's a lot of numbers, but it makes a huge difference on that entry level condo, because condo prices haven't dropped by $120,000, but your borrowing power has. So we need to
Yeah,
see the Bank of Canada. We need to see 5-year fixed rates hanging around 3.5%, 4% max. So we've got another 50 basis points, 100 basis points to go on the fixed side. So I don't know, what was it going to be, 150 basis points on the Bank of Canada side? But we need some movement
Yeah,
still in order for that market to return.
John's face says hogwash.
okay.
Where's the drum? Where's the drum?
Where's my drum?
emoji? I want a banging drum graphic.
That's crazy.
Here.
Like a year and a half ago, so 2 years ago or 3 years ago, people could qualify for a $500,000 mortgage when the qualifying rate was at 5.25. There wasn't a $500,000 condo available now at that time.
No,
Prices were
you still need a
continually
down
going
payment.
up. So people couldn't afford that. Now that they afford, I'm going to take your word for it, but $120,000 less or $80,000 less, those condo prices have gone down, and there's tons of them for sale. They've dropped off, or they've stayed even. So people making more money or being able to qualify for more or less, there's tons of them available. If people wanted to go out and buy a 1-bedroom condo right now, have at it. There's tons of them. But when the interest rates go down next month or next year, there's still going to be tons of condos for sale because people no longer want to buy that. It's not first-time home buyers that are buying them.
Show me the money, Sean.
Let's have a bet on this, because I'm telling you, next year there's going to be tons of condos for sale, and they're going to be going down in price, and still people won't be buying them.
Oh,
because
we should wager, because I think that the sales for condos, once the rates get low enough that people can qualify for them again, they're going to fly off the shelf.
Maybe, but they will come down in price more. It won't be a frenzy of like multiple offers, because there's no longer the secondary investor market, where it was investors that were driving the purchases of the 1-bedroom condos, those small little properties that you'd rent out.
For sure they were. Yeah.
The capital gains tax has changed, and they're now out of style. And we've got lots more that are coming of that type of property. So with more supply,
fewer students, like fewer
fewer international students. Fewer people wanting to live in that type of property. The first-time home buyers I'm talking to, townhouses, going outside of the GTA for a semi-detached, like 800,000, 700,000. Would you want to buy a $650,000 or $700,000 1+ den, or do you want to live in a townhouse? Client of mine bought a townhouse in the East End of Toronto, in City of Toronto, for $700,000. That seems like an easy choice to me.
I mean, that's a great deal on the.
That was an amazing deal
on the townhouse, because even a couple of years ago, townhouses were barely selling under $1 million. You could get in for $980 or something like that. So 700,000 is impressive number. I don't know what the property looked like, but
yeah.
But like the idea that a year and a half ago, if a 1-bedroom condo was selling for $600,000, it's not selling for 520 or 480 now.
We're gonna have to do some digging about this, because I've got somebody who's looking right now, and I'm acclimated to it now, but like they're looking, and condos are 470, in like decent areas with a nice layout. You know what I mean? Like they're small, of course, but
we should definitely take a deep dive into that. Maybe we need to have somebody on here who's a sort of professional in that aspect of it, to do a price analysis. I haven't been seeing anything that low on, like, let's say a 1-bedroom, because a year and a half ago, a 1-bedroom you could fetch 600 for.
Yeah. Okay, so pivoting a little bit, I have a quiz, but you're gonna know the answer if you read the article that you sent.
I did not read it.
Enough detail. I'm just banking on that you didn't. So, how much household debt do you think Canadians have? I'll give you 3 options: 900 million, 56 billion, or 2.4 trillion. How much debt are Canadians in?
I didn't read it, so I'll give you my honest. I think it's the 56 billion.
What do you think, Vaughn?
Well, I know the answer because I have the Google at my house.
But you're supposed to just tell me what you think.
But my original
You
guess
cheater.
would have been in that 56 billion.
It's 900 million.
It's 2.4 trillion.
Yeah, it's
crazy.
just the household debt is, and I looked at this as well. It's just slightly higher than our GDP.
Now I'll say I don't know how much. I don't know. I don't know if that includes mortgages.
2.1 trillion is Canada's GDP. So 2.4 trillion being our household debt. I don't know how this equation works. I think we need to have, Benjamin Tall or maybe Sherry Cooper on this show to break that down. Is that common for household debt to be larger than your gross domestic product?
Let's ask capitalism.
Do you have his or her phone number?
It's definitely a him.
So 2 point. Maybe I'm not doing the math right. So out of 41 million people, what is that per person? Then?
That's got to include mortgage debt. I
would think so. But what does the article say?
It didn't. Let me see if I can open it now. I think the article was talking about people are in terms of the kinds of people who are really into rate right now are people who are shopping, people whose renewals are coming up, and then people who have so much debt that they need to refinance. And I love consolidating debt for a refinance. It feels so good. But if you've got so much debt that you've got to consolidate on the B side, it's expensive to do that. So let me see. Refinancers. Canadians. Okay.
Let me jump in. So you read that and I'll just jump in. So
keep talking.
So if there's 41 million people in Canada and the household debt is 2.6 trillion, that per person, obviously that's not working age people, that's every single person, but for households, that's $63,414.
Yeah, that sounds reasonable. When we're writing $800,000 mortgages for entry level houses in Canada, that eats up a lot of that average.
Yeah, and not everybody would have 63,000. Some people are going to have zero, and some people are going to have, 2 million.
Yeah,
if it includes household debt. But if you think like how many car loans we're seeing these, right? Like we're seeing people's liabilities. People have $63,000 car loans for fairly entry level cars. Like we're not talking like top of the line cars to get $63,000 worth of debt. But this is not per household either, right? This is
total.
I'm going to Google that.
Yeah, I didn't. You know what? The article just strictly says Canadians are buried under a record. It's a record. 2.41 trillion in household debt. And there's a hot link and it takes you to 11 tips to save money when eating out.
Eating what?
Thanks for that helpful hot link.
This is why we're in the trouble that we are.
Right? It's the avocado toast.
Okay, so the household debt per household in Canada, I'm using ChatGPT, is $173,588 if we consider that there's almost 15 million households in Canada. I don't know. That seems reasonable to me. Like that doesn't seem like 2.6 trillion is that much money.
Have you been hearing about this ChatGPT thing that students think that ChatGPT is search, and so they're asking like Google questions in ChatGPT and just coming up with all kinds of crazy.
Yeah, you get crazy answers.
Facts.
I think,
but for quickly analyzing something, like tell me this and divide that, and I think it's useful. But for like, who is this person in this movie? I don't find that's that great.
There's teachers who are like, my kids are telling me all kinds of crazy stuff that's not nonsensical, and they're like, let's look it up together, and they're like, I'm searching for it in ChatGPT, and they're like, that is not a search engine, and they're like, no, it tells you everything.
But it sort of is. This is the
it
thing.
Isn't though. It isn't. And actually, there's a way that it becomes more garbage because it's going out with its tentacles, and it's searching for all of the information that's out there to give you answers. And then, but also when it produces its weirdo answers, like you should eat rocks because it's confusing minerals or whatever are good for your diet. It's going out now, and its tentacles are finding its bogus responses, and it's all just becoming a tangled mess of a rat king or whatever.
Speaking of sort of making the population dumber, did either of you catch the U.S. presidential debate last night?
I caught some
No.
highlights.
There's no highlights on that.
Yeah.
I felt like I lost brain cells by watching it. Even the questions, I'm like, these aren't even presidential questions.
I made a choice last night because friends of mine were texting me about it, and I was like, I'm going to go to sleep at 9:30, and that is what I did, and I had a great night's sleep.
So what was your takeaway, Vaughn?
Oh, my takeaway is that we're in big trouble. If this is a trend, if this is the criteria of how we select world leaders, we're in big trouble. And if ChatGPT is producing air quotes knowledge, we're in big trouble because we know that it's not. We know that ChatGPT is regurgitating whatever's on the web, and most of the stuff on the web isn't peer-reviewed articles; it's people's opinions. So they're gonna amalgamate the most amount of people's opinions, and then kids are gonna read that and they're like, "Well, it's fact." So we got problems. This is why you need three when you're purchasing a property. This is why you need three knowledgeable people and not ChatGPT to help you get through that, because we got the facts here.
Yeah, well, I think well said. We all should be worried. I think that we cut out, you know what? I was gonna say that we were gonna push Bank of Canada, the qualifying rate to another conversation, but it seems like you got it in there, Vaughn. It seems like we know where you stand.
Look, I'm going to be banging that drum for a long time until we get to the other side of this, and you're going to see.
We'll talk about it more another time. We'll talk.
Should we get at the
about
stress test? Do you guys want to take this apart this week?
No, let's save it for next week.
I'm going to remember to hit our little outro before we go. It was a pleasure talking to you.